And welcome into Market Talk. As always, thank you so much for joining us, making us part of your day. I'm your host, Jesse Allen. You can find us online, markettalkag.com. That is our home on the web, markettalkag.com. Find all of our streaming sources there, our social media links, news of agriculture, and much more. Thanks for joining us here as we take a look at Tuesday's market trade. And it was a rough day throughout the grains, livestock, energies, financials, you name it. A lot of things to discuss. Risk off day in the trade here. A lot of selling pressure to wrap up the month of November. Let's talk about it. Let's bring in Bill Biederman with agmarket.net joining the show. Bill, good afternoon to you, sir. Thanks for joining us. Hope you had a great Thanksgiving.
I had a great Thanksgiving. I ate a lot of turkey. I'm afraid a lot of people eating crow by Christmas if this market keeps doing what it's doing.
Hopefully, crow is not on the menu, but you are absolutely right. It's not a pleasant market trading situation. Last couple of sessions, and today, Tuesday, we kind of accelerated things to the downside in grains. And it seemed like a lot of the selling pressure really kicked in once Fed Chair Jerome Powell's comments were out there. And I know the market was looking for kind of a dovish stance, and we got hawkish comments from many people think. What's your reaction to Fed Chair Powell's comments and maybe how that parlayed into our grain commodities livestock here today?
Well, I think what happened over the weekend actually put central banks in their backs up against the wall because, the central banks, the inflation now is far exceeding GDP growth in several sectors. So they really are starting to realize that this inflation could get out of control. And so they need to raise rates or taper or do whatever they have to do to pull that back a little bit. But I'm sorry. But the situation is that if they do that too quick, when all of a sudden there's a whole new COVID threat, they could really collapse this bubble that they've created. So they can't do that. So their back is kind of against the wall. They need to raise rates, they need to taper, but they can't do it when all of a sudden there's this new threat of COVID. So when he was in a position today to make comments, he's like, yeah, we're going to taper, we're going to raise rates, but we're going to do it when the economy can stand on its own 2 feet. And that's what the market reacted to Sunday night. That's why we were sharply risk off, because the market knew and was counting on them tapering. And then all of a sudden, when they saw that this new variant out there, they were like, they won't be able to taper. And so we're risk off. We're going the other way. We're going to sell everything. And that's what happened.
Well, and you mentioned that new variant of COVID, and it feels like, a lot of folks are pointing their fingers at that being the main reason for the sell-off. But, I think along with the comments and just the situation we're in with the inflation, et cetera, and there's other factors as well. I don't know if we can necessarily point to just one factor per se. And of course, we have the end of the month, which is typically a time where we see a lot of liquidation and we wait for new money to come in to begin a new month.
Yeah, I think in the big picture, this is an amazingly great opportunity for the market. It needed to pull back. If we go up too fast, we leave demand in the dust. We don't want to do that, number one. And number two, the big picture, it hasn't really changed. I mean, we all know that COVID's going to be around for a long time. We got to learn how to live with this stuff, and I think we are. And there's no evidence. In fact, all the evidence we've seen so far is that this isn't as a serious of a strain. It spreads faster, but it's not. Health is serious. So the only way, somebody on Bloomberg said it today, and I don't remember who it was. She said, the only way that this will really have an effect on us is because I guess it's more adverse to little children, is if all the moms just tell their husbands, we are not traveling, period. That would be a worse situation. Other than that, we don't really see this lasting, and the sell-off's going to get bought.
Well, looking at the grains, wheat, the leader to the downside on Tuesday. And, I think the last couple of sessions now, last couple of weeks, we've fallen, 70 to 90 cents roughly in these wheat complexes. Chicago, KC, spring wheat's faring a little better just with the short supply there. But overall, this wheat market, which was kind of our bullish leaders, now kind of our leader to the downside, it feels like, Bill.
Jesse, the rally we put on in the month of November, all we've done is we haven't even quite taken that all off. It took us about 12 days to rally and 3 days to sell off. So we always go down faster. We're almost down to a 50% pullback of the October to November rally. And we're almost down to a long-term moving average, which is trading about 20 cents lower than where the market is. We are back down into what I would call a corrective setback. And if you're still bullish world situation, this is where you want to buy it. Now, in the world, it's complex because the last push up was a lot of because of what was going on in Australia. We don't know how that's all going to pan out, but it's a quality problem. It's going to be a bigger situation for feed wheat and feed and corn competitiveness than it is for the wheat market itself. But if you want high protein, good milling wheat, the supply is shorter than it was a month ago.
I know looking at soybeans today, bean oil down sharply, kind of going in tandem with crude oil, which is down again today. Really looking at soy, corn, wheat, the fundamentals really haven't changed here very much, Bill. It feels like you mentioned just kind of this correction that the market has needed is probably healthy for the markets overall.
I think so. The product is still going to be very profitable for crushers. For instance, in the meal, meal is trading right now about $40 cheaper than the normal value to soybeans. So meal is really good value here. People are going to be buying it. People who are end users are going to be buying. We still have a lysine problem. We don't have the fear of a shortage has kind of dissipated a little bit, but we still have the logistics problem of getting it. So people have just adjusted. They're buying more meal, and so the meal is going to find really good support. The soybean oil, it got a double whammy. I mean, the crude oil market, the energy markets were crashing on the COVID news. The concerted efforts between the U.S. and Japan and a few other countries to open up reserves, that's a drop in the bucket. It ain't going to do anything to the total world supply demand, but it's a psychological factor for a New York trader that doesn't know what they're doing. And the other factor that came into play was Brazil. They did not raise their renewable standards, so they left it at 10%. That kind of took a little hit on it too. All of these things, though, are not different than what they were a month or two ago. We believe that the oil market is still headed for a renewable fuel boost in demand, and it had a huge rally, and pullbacks are needed. We got to keep demand with the curve.
Well, Bill, the corn market, I was happy yesterday with how we closed coming off the lows, and even today, I'm still fairly happy with this corn market with where it closed, down 14 in December, 567, March corn, 567.5. And, I know a lot of folks are still fairly bullish this corn market, and it just feels like corn has been doing its best to hold up against this broader sell-off here the last couple of sessions.
And when we lump all the starched grains in together with wheat and barley and corn, yeah, we don't have as bullish a structure as we did 3 weeks ago, because we're one more week closer to seeing, is China going to start shipping this stuff out, or are we going to start backing it up, and are we going to talk about Taiwan and China more than we are corn in China? So that's definitely a factor that we all have to be aware of, but nothing has really changed these markets yet. Technically, we're still well above the November lows in the corn market. We already talked about soybeans. All of these markets are above their moving averages. Until the technicals turn, I don't think you're going to see funds massively going short any market, and they're not short any market. They're still long, like close to 300,000 in the corn.
Well, and I think as well, the next couple of weeks ahead, barring any more black swan type news, this is typically a time period where we get quiet. We don't have a whole lot of action. We try to find some ranges. It feels like going through the holiday season and kind of sit and wait on those January numbers. Any advice for folks looking at the last couple of sessions of sell-offs, if they're sitting down before the end of the year, looking at their marketing plan? Any new advice you'd share with them, Bill?
Well, in the big picture, first of all, we're in the same sideways range we've been in since May of last spring. We have not violated the highs or the lows in the corn market. And we just hit the upper end of that. So if you've got grain that you need to move logistically, you need to move your trucks, or financially, you need cash ahead of the end of the year, do it. Don't even think twice. But assuming that we continue to be in a sideways range, which this time of the year is called the distribution phase, we know the crop, we basically know the demand, so it's just rally till you get enough to move, sell off until you get it used up, and then you go back to the highs. That kind of a market, I would rebuy options on at least a third of what I'm selling on the breaks. And that's how we've been doing it. We're really satisfied with our positions. But in the bigger picture, step back one, I'd be more friendly corn going into next year because of the acreage argument, and I'd be more bearish beans for the same reason.
Bill, looking over the livestock sector, we had a mostly down day there today as well. Cattle, I know Monday we had an outside day down and got back in here with more pressure today in the cattle market. Even though cash country, there's still the thought and the hope that we're going to have higher cash again this week. What's your thoughts on the cattle market here after seeing more pressure on the futures trade today?
Futures seem to be pretty well balanced as far as a charting standpoint. We broke out to the upside when they got above that 141, 140 and a half area. The market had that big rally up to 145 and pulled back. And basically today's low on the February contract is right about where we broke out to the upside. So, a lot of times old resistance becomes new support. And that should be this in the 137 on the February. I'm sorry, I was looking at the Aprils when I was saying 140. So the February is in this 137 area, and that's pretty much in line with the cash too. We're above moving averages, so the trend is up. We're just going to trade this thing technically, and again, holiday trade. Cattle will trend more than the grains during this time of year, but again, holiday trade.
Exactly, holiday trade. And I think the same in the hogs too. I know December getting ready to go off the board. That was higher today, but trying to maybe play along with cash there. And really in the hog market, there's just a lot of hogs in the countryside to keep going through, Bill.
There's a lot of tonnage. We need to see these things get cleaned up a little bit. It's amazing how on the retail end, and I'm talking from everything from beef to pork to eggs, right? The retail end, the prices continue to be very stout. But back on the production side, there's just very little margin to work with. I know the egg guys are just really getting killed, and there's no big win in the hogs. There's a small win in the cattle right now. I don't know. It's going to take time, but the retail side has figured out how to make money with fears of logistics. It's the production side. We'll have our turn. We just got to be patient.
Well, Bill, great stuff as always, and I know you are a busy guy. Any other final thoughts you have for us here today before we wrap up? Anything else you want to reiterate?
Now's the time to do all your tax planning, get your year ends done, and sit at your office till at least 2 hours a day, but then spend a lot of time with that family because this is the time. This is the place of the year. You got to do it.
And it's also the time where, especially a day like today, where the market's tanking, we don't necessarily want to look at it as much as maybe we would on another given day. And we'll hope for a better day tomorrow. That's all we can look forward to, right?
Always an opportunity. Thanks,
exactly.
Jesse.
Bill, if folks need a little advice, I know they can reach out to you and the team there at agmarket.net very easily by going online or checking out the app, can't they?
Yep, absolutely. And if you got any questions, we've got an 800 number right there. Just give us a call.
agmarket.net is where you can find all the info. Bill Biederman, appreciate the time. Thanks for joining us on Market Talk here for this Tuesday to wrap up the month of November. We will talk again soon, sir. Thank you.
Okay, thanks.
Bill Biederman with agmarket.net, our guest today on Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.